name is Callie. I'm from the marketing department here at OUCU Financial. Thank you for tuning in to the construction loan seminar today on your lunch hour. We know that a strong foundation of financial education has a value beyond your bank account. OUCU is your dedicated financial wellness partner, and our mission is to help you. Building your home can be a very overwhelming process, and today our goal is to help you feel more confident as you work through that. As the leading mortgage lender in Athens County, the OUC mortgage team truly are the experts. So ask the questions you have here today. You can send them in to the Q&A chat at the bottom right of your screen. Click the three dots next to the regular chat icon, and you will find the Q&A feature. And then we hope to have time for questions at the end as well. For attending today, you'll receive $100 off a closing cost coupon. This will be on the last slide of the presentation. You will see a QR to scan for a digital copy of the coupon, but additionally, our originators will have the names of all of those attending today. We will guarantee that you can get to take advantage of this promotion. And thank you to our home loan team for offering that to our members. And this offer will be good through the end of the year. Like I mentioned, I'll be sending out a recording of the seminar to all who are registered within a couple days. Now I'll turn things over to Shelbee Wagener, OUCU Mortgage Originator, who prepared this very informative and valuable construction loan seminar for you today.
Hi, everyone. As Callie mentioned, I am Shelbee Wagener. I am OUCU Financial's Mortgage Originator, so you'll be talking with me throughout the process and asking any questions you might have. I've been with the credit union for about 9 years. I've been originating for about 6. And I will hand it over to Laura so she can introduce herself as well.
Good afternoon. My name is Laura Humphreys, and I am the Mortgage Operations Manager. I review all the mortgage files up front. I perform the credit checks, review secondary market eligibility, and I ensure the loan is compliant. Thank you very much for joining us today, and I'm going to hand it back to Shelbee so we can get started.
Okay, so once again, thanks everyone for being here today. We will go ahead and get started. So here are the topics that we're going to be going over today. So we'll be going over what the process looks like, what loan qualification looks like, also what private mortgage insurance is and why that might benefit you, the down payment requirements as well as the closing costs and why they're equally as important. Also, what loan options we offer and the process itself. So first, we are going to go over the mortgage process. So the biggest question that I get is, what structures can I finance? So that's going to be single family home as the short answer. As the long answer, we're going to be looking for stick build, modular homes, or manufactured. Manufactured, they do have to be at least a double wide and have to be on a permanent foundation and considered real estate for us to be able to lend. Okay, so here is this flow chart. So this is maybe a little bit overwhelming. There are a lot of moving pieces and parts, and that's okay. Like I said, I will be here with you every step of the way. We'll be diving in a little bit more on each of these topics as we proceed. So we'll just kind of go through the flow traffic together, and then, like I said, we'll elaborate on it a little bit more. So first, you'll go through the application process, contract and build plans kind of go together on that one. Then once we have those items, we can order the appraisal, title search. You'll be looking for homeowners insurance in the midst of those things. Once closing occurs, then the construction can begin. We'll pay out to your contractors, and then construction is complete, and you have a new home to live in. So that's really exciting. Kind of in a nutshell, if you will. So this can take a little bit of time, but we will get to that finish line. Pre-qualification. So this is going to determine your path. So where you are today might not be, your exact starting date, but we can definitely get those blocks in place. That way you're in a better position maybe in 6 months or whenever you feel like you're ready to actually move forward with that. So we'll be looking at all of the different options, and we can estimate estimate payments and the loan amount based on your income and your debts. And for pre-qualification, we can actually just talk hypotheticals. So as long as I know what your income is and your current debts, what you would like your monthly payment to be, those things, we can talk about what that would translate to in the amount of a loan, just to see if we're on the same page as to what you're wanting to do and whether you'll fit into kind of a qualification box before we would hard pull credit. So in talking about that, once you actually apply, that is a hard credit pull, and we're going to be collecting all of your personal information. So we'll ask for your employment, your income, and with that, we will pull your credit report and get all of those details as far as all of your accounts, your score, all of those things. We'll also be asking you to provide those supporting documents that go along with the application. So pay stubs, W-2s, tax returns, bank statements showing those funds available for closing costs and down payment, all of those things. We do have to verify all of that. There are several different ways to provide those documents. So if you, can't come into the branch or, whatever that may be, you can always upload those supporting documents into your application directly, and that is a safe way to do that. We also offer secure email. So there are multiple different ways to get that secure, the information into us securely. As part of the application, we'll also ask you to review and sign your initial disclosures. These do not obligate you to the term, so we can make any updates that we need throughout the loan process. This simply shows that the application was completed. Once all of your supporting documents are provided and you sign your disclosures, we'll then send your file for underwriting review. OUCU does have an in-house underwriting team, so I know that that's a big question that we get a lot of times, and we do have an in-house underwriting team, like I stated, and they are wonderful, and we look at everything on a case-by-case basis. Once the application review is completed, I will contact you with those results, and if we're able to move forward with a pre-approval, that is when we'll be able to give you a pre-approval letter that says what amount you're approved for, and this again is going to be based on all of those hard details that we've been provided by your credit score, as well as your pay stubs and all of those things. This pre-approval is going to be good for 120 days or 4 months. And this is, subject to no change in the application information. So, we don't want you to be going out and buying a brand new car and, getting that debt ratio up and those kinds of things. So we'll talk about that a little bit more here in our coming slides. So once you're pre-approved, you might be asking, okay, well, what's next? Next would be the contract. So we are able to, build from the ground up on land. So if you're purchasing land and wanting to do the construction loan all in one easy swoop, then absolutely we can do that for you. Or if you have an existing home that you're wanting to make significant renovations to, maybe add an addition, those kinds of things, we can absolutely help with that as well. Your contract needs will vary based on your specific situation. You can also already own the land and build on that property that you already own. So that's also an option for you as well. So obviously, based on your specific situation would be what I would ask you for. And then for the build itself, so this is a big question that we get also. We cannot process any self-builds. So a general contractor is going to be required. The contractor is going to need to provide detailed construction plans. What we're going to be looking for is a contract that shows the build cost. They'll also want to provide a materials list, a floor plan, and a draw schedule that they want to be paid according to. All of these items are very pertinent to our process, so we do require all of those details to be provided by the contractor. They all do have to be signed off by all parties, and it doesn't have to necessarily be signed in the beginning stages, but it is something that we will need to have in the file. So once we have all of those detailed construction plans, if we have not worked with your selected contractor, we may ask them to provide some further details for us to proceed with them as the contractor. Again, that's on a case-by-case basis. Whenever you start the process, I'll be asking you the name of the desired builder, and we'll go from there. And if we need more information, then I will certainly let you know. Okay, so let's say that we have all the information on the contractor that we need. We have all of the land or home information. Next step is going to be ordering an appraisal. So the appraisal is going to be completed subject to those improvements that are shown in the contract. So again, that's a big reason why we're asking for the materials list, because that can hold a bearing on what the new value is going to be. We're also going to be looking for, any additional square footage that's going to be added, those kinds of things. While after the appraisal comes back is when we order the title search. So we request that from a title company to ensure that there are no existing liens that would affect our lien position once we close. It checks for encumbrances, involuntary liens, tax judgments. If you're buying the land or buying the home that you're renovating, the seller is obligated to transfer the title as free, clear, and unencumbered. Also, once you are under contract, have those build plans, you should start shopping around for homeowners insurance. Since it is a construction loan, you'll want to detail out that information to your insurance agent, because sometimes it can look a little bit different, but they'll understand what you mean if you tell them that you're in the construction loan and you need to finalize a homeowner's policy. That dwelling coverage amount is going to be your loan amount at minimum, and all borrowers do need to be listed on that policy. It's a good idea to go ahead and let us know who your agent is that you're working with, just in case, we need to talk with them directly rather than making you the middleman in that. Okay, so then the next step after, so appraisal's back is good, title's back looks good, you finalized your homeowner's insurance, we're going to get to closing. So here is when all of the final documents get signed. So you would go to our title company and sign off on all of those final documents. It is a one-time close, so this is going to be billed to permanent. So what that means is we're going to be completing your build, and then once the build is completed, you're going to be converted into your traditional principal and interest mortgage. So there's no secondary closing that needs to happen to get you into that type of a product. Closing does need to happen before any work starts on the property, and that is super important. So again, no work can be completed to the property before closing. Typically at the closing table, the contractor does receive his initial draw. And again, we'll be releasing those draws according to the draw schedule. And then once all of the documents are signed, all your T's are crossed, all your I's are dotted, then the work will officially begin on your new home. Our construction timeline, we like everything to be done within 6 months. If it goes outside of that 6 months, it is not the end of the world. We are not going to, call everything due in full by means, but we will just need you guys to sign an additional document. We'll ask for an estimated, time of completion, all of those things. But like I said, we do like those projects to be done within a 6-month time frame, if at all possible. As far as paying your contractor according to that draw schedule that I've mentioned several times, we will have an appraisal update completed as well as a title update. So the appraisal is going to be ordered and shown that the work that the contractor is asking to be paid for has actually been completed. So we want to verify all of that information. We'll also be doing the title update so we can make sure that there are no involuntary liens or anything like that. So just making sure that his subs are being paid, the subcontractors are being paid, and all of those things are still good to go. Again, the contractor is going to be paid out per that draw schedule. When the updates are back. So once the appraisal's back and everything looks good on that, we will contact you as the borrower, say, hey, the updates are back and looks good. Is it okay that we, release these fees to your contractor just to get that initial permission? And then the contractor will need to sign for the check. So there's a few things that they'll have to sign off on. Myself or someone from my team can coordinate with the contractor. That way, again, you're not stuck as being the middleman with the contractor. If your contractor's local, they can come in and pick up the check physically, or if we need to make alternative solutions, we can certainly do that as well. Okay, so that is the process in a nutshell. You might be asking yourself, okay, well, that is all well and good, but what do I actually need to be able to qualify for this? So that is what we're going to go over next. So a big portion of the qualifying is your credit score and your history. So we'll go over what those kind of look like pertaining to our construction loans. So credit score is a 3-digit number used to predict a risk of serious default. It can range from 300 to 850. So there's a huge variance there. So what we're going to be looking for score-wise, we'll go over next, but we're also going to be looking at your history. So typically what we're looking for is at least 3 credit references with a 2-year history. So 2 credit cards, a car, or maybe a student loan, a car, and an auto loan, something like that. So we're going to be looking at that history. And again, this is typically the minimum that we're looking for, so we can show a positive history of repayment. So for the construction loans, so if you are looking to build from the ground up, stick-built home, 660 is typically the minimum. If you are looking to go manufactured or modular, we do require a little bit higher of a score of a 680. I would just like to reiterate that we do look at everything on a case-by-case basis. If you're, teetering on that line for any reason, we can, like I said, look at everything on a case-by-case basis. But this is typically what our thresholds are for these loans. Okay, another big portion to your qualifying is going to be your debt-to-income ratio. This is used to measure an individual's ability to manage monthly payments and repay your debt. So that's going to demonstrate an ability to repay, and that's how we describe it in my world. So we just want to make sure that, your loan on paper is going to actually be able to be repaid based on what you already hold. We calculate this by taking your existing payments and any projected payments that we're going to be processing for you by your monthly income. So just an example here for you, we're going to be taking $1,500 in total debt. So that's going to, let's say, a minimum credit card payment, a car payment, and then your projected mortgage payment. We're going to divide that by your gross income. So your gross income is before any taxes or deductions. And that is how we get to what the ratio is. So 1,500 divided by 4,000 comes out to 37.5% debt ratio. Our maximum lending guideline is 43%. We can't go over that dollar amount, or I'm sorry, that percentage, as far as the debt to income ratio. So as part of the debt ratio, we are going to be looking at several different items as far as your housing payment. So we'll be looking at your loan payment that you'll be making to the credit union. And then we're also going to be looking at your homeowner's insurance and real estate taxes. OUCU does not escrow for these items, but we do count them against you for your debt ratio because they are part of, owning a home. So they do need to be accounted for. And for the homeowner's insurance, we'll divide out what your policy premium is for that 12-month period. And for your taxes, we'll take a look and see what that averages out to on a monthly basis as well. And that is how we come up with that whole housing payment. Okay, so I have mentioned private mortgage insurance or PMI a couple of times in the presentation so far, so I'm sure some of you are wondering what in the world that is. That is, so it's private mortgage insurance, and it allows for a smaller down payment. It's paid with your monthly mortgage payment, and it allows lenders to say yes to more borrowers if you don't have a 20% down payment. It's important to note what those credit score requirements are, because those are those requirements by PMI for the most part. So what we'll be looking for on that is handed down by the PMI company. So PMI, again, is required on loans with less than 20% down. So, and it's not a lifetime PMI. That is an important note. It may be removed after 2 years, or it'll automatically drop off at 78% loan to value. Another important note on this is it may be removed after 2 years, but you also have to meet that 80% loan to value threshold. So you can't be at, let's say, 85% loan to value after 2 years and remove it. So you do have to meet those 2 requirements in order to remove it. But again, it does allow us to say yes to more borrowers. Okay, the next item that we'll go over on the requirements is payment and closing costs. So with your down payment, a higher down payment is going to equal a lower mortgage monthly payment. And this is going to be due at closing. The down payment requirement on the construction loans is 5% across the board for any of those structures that I mentioned earlier. So we're going to be looking at 5% for the stick build, the modular, or manufactured home. This can be a combination of lot equity, gifted funds, your savings, retirement, all of those things. So we have different options available for you, and we can definitely talk about what your situation is on a case-by-case basis. We're not going to go over each individual one too in depth. So lot equity, that is a big one that we get asked. That is going to be the value of the land minus the amount owed. So if you owe a mortgage on a piece of land that you've already purchased, and then the remaining amount is going to be what we would consider lot equity. And this can benefit you because this could potentially be used as a down payment, so bringing less cash to close, or less funds to the closing table, I should say. How you can calculate this is your full appraised value if the land is owned free and clear, and it's been purchased more than 12 months prior. If it's been in your name for less than 12 months, we can only use the purchase price as the value. So those are 2 important notes as far as the lot equity portion goes, simply because that 12-month threshold does hold a bearing as to how much we can give value to on that, on that land. Another portion to lot equity is you can also have a gift of lot equity. So if you have a relative transfer you property with no sale, we can use the full appraised value as the down. You would essentially just have to pay closing costs in that particular situation. For us to be able to accept that gift of equity, the deed does need to be recorded in your name by the day of application. But if you want to talk about, all of those things maybe prior to having the deed put in your name, please feel free. Any questions, you don't have to be exactly ready to apply and get the ball rolling to ask questions and, have a conversation. I just wanted to encourage everyone on that as well. So closing costs. So along with down payment, closing costs are necessary for the construction loan to close. This covers the cost of services needed to legally transfer the property if there is a seller in the situation, or it's going to help with the legal recording of the new mortgage and with the build itself. So you can see here what these bullet points are here. These are going to be the main types of services that we're going to be looking for. So your loan cost, your legal cost, title cost, and then build. So we'll have the appraisal and their updates as part of the build. And then, like I mentioned earlier, we will have title updates for each of those draws that the contractor is asking to be paid on. Okay, so homeowners insurance, just reiterating, I think what I've already stated before, the policy for the first year does need to be paid prior to closing. You'll want to be shopping around for that once you get a good idea of how much your build is going to cost. Once we order an appraisal, those kinds of things, that's typically when you'll want to start getting quotes from different agents and know who you're going to finalize through. Okay, so our next topic, we're going to go over what loan options OUCU Financial currently offers. We have an adjustable rate product. It is a 7-1 ARM, so that means it's going to be fixed for the first 7 years of the loan. It is going to be on a 30-year term. It may adjust each year after that 7-year initial period. So in year 8, it can start adjusting. It can go up and it can go down. There is an annual cap of 2%, so it can't go up any more than 2%. In year 8, and then there is a 6% lifetime cap, so it could never adjust up more than 6%. So just keep those items in mind. I do understand that maybe sometimes adjustable rate products get a bad reputation, but I do think that this is a good product, especially for this type of loan. There is no prepayment penalty, so if you really would like a fixed rate option, you always have that option once the build is complete. If you do want to refinance into a fixed rate option directly after, just understand that it is a new application and all new closing costs. So we wouldn't be able to, just take the information from the construction loan and put you into a fixed rate loan. It would be a whole new but again, there is no prepayment penalty. So if you would like to, ride out, let's say 5 years or so, and if the rates go down, you can always consider refinancing at any point. The loan payments, those are a little bit different than your traditional mortgage. So during the construction period, you're only going to be paying interest based on what the contractor has drawn from the line of credit. So draw 1, let's say, is at closing, and so you're only going to be paying interest on draw 1, and then draw 2, you'll be paying on, the total between draw 1 and 2, and again, interest only based on that information. Once the home is completed and we convert your mortgage into that traditional principal and interest, that is when those full payments are going to start becoming due. We will, of course, let you know when that first payment date is going to be and help you set up maybe an automatic payment, all of those things, and you'll start receiving those monthly mortgage statements for the loan itself, because at that point it's considered a true mortgage. One other thing that I also wanted to mention while I have you all here is that we do offer land-only loans. So this is going to be on improved and unimproved land. So if it has utilities or if it doesn't, the terms and the rate are going to vary based on those details. We have anywhere from a 5-year term up to a 15-year term. But again, all of those terms are going to be subject to your particular piece of land and what is going on with that as far as utilities go. So that is all of the basic information on the construction loans as well as our land loans that we offer. So you might be asking yourself, why choose OUCU? I might be a little bit biased, but I think that we are the best, and we are the largest lender in the top lender in Athens County. We do have a very easy application process. You can apply 24/7 online. We have myself and my teammates are available by phone Monday through Friday. We can set up an appointment and I can take your application via phone. We have a virtual setup as well. So if you're not local to Athens, then we can still have that face-to-face interaction. You're never going to wonder where your mortgage is, which is huge. So we don't sell our mortgages. So that means that we are going to service your loan for the life of however long you have it. You're going to make your payments here. You're going to ask your questions here. You know, we're a one-stop shop as far as closing and questions, and for the life of the loan, we are going to be here. You can also make your payments through our online banking. So that is super convenient. You will receive a mortgage payment, a mortgage statement, I apologize, through the mail, but you can make those payments through your online banking, you know, track what your rough balance is, make extra payments to principal, all of those things. So all of those things make us wonderful in who we are. And we do only lend in Ohio as of right now. So if you're looking to finance, you know, elsewhere, unfortunately, we are restricted to inside the state lines of Ohio. Like I mentioned earlier, you are able to apply online 24/7, and this is going to be through Mortgage Click. This is our interface for mortgage applications. You get fast loan decisions. You can view rates. There is a loan consultant, so you can plug in numbers, you know, whenever your little heart desires, and go through what that payment would be, what your closing costs are going to be, all of those things. You can also view what our current rates are at any point. We also offer there's home buyer education through Mortgage Click, so you can click around and, you know, there's some questions. There's tools out there that are going to answer some basic questions for first-time home buyers, or even for first-time construction loans, and mortgage in general. And you can get to Mortgage Click through our oucu.org website. Okay, and if you guys are ready to make an appointment, here is all of my information. That QR code that is to the right of my information is going to take you right to our Make an Appointment portal. And then you can also scan your the QR code on the left there for your digital coupon. Don't feel like you have to. Like I said, like Callie mentioned earlier, we are going to have a list of everyone that registered and came to our webinar today. So we'll have all of your information for that coupon. Okay, and then we want to thank you all again for coming and joining us for this lunchtime webinar. I hope that everything was very informative and you leave a little bit more knowledgeable than what you came in for. And I'm going to hand it back to Callie for her closing comments.
Well, thank you, Shelby. That was a really great presentation on this whole process. And I really loved the detail about being able to pay right within your online banking. So start to finish, just a really great experience here with OUCU Home Loan Team. And I want to open the floor for questions. You can chat them in. I can unmute, however if you have any questions.
We don't have any questions at this time.
Oh, okay.
Thank you.
Yeah, thanks for joining us.
Yeah, we learned a lot today. We appreciate it. We'll be in touch.
Perfect.
Great.
You're very welcome.
Have a good day.
Thanks, you too.
All right, we're pretty silent, so we'll go ahead and cut things out. Again, thanks for joining us, and Like, we have the answers. So feel free to ask the questions, email, make the appointments. We are here for our members and for our community. So excited to work with you. You guys enjoy the rest of this beautiful day.